largely AI stocks and periphery stocks, really driving the markets in many ways. Let's talk a little bit about the great unknown of AI. And if we think about various ages, our industrial ages, whether it be steam to electricity to the information age and now to the age of AI, would you consider this to be the most disruptive force ever in modern American history?
I think it's way too early to say that. I wouldn't go that far. I would say clearly generative AI has all the earmarks of an emerging technology that could be very important in our economy and in our society. But it's very early to be, to be making that kind of bold statement. So, what we're seeing is companies and institutions like the Fed for that matter, are starting to experiment with what they can, how this new set of tools can be used in our operations. Mm-hmm. And it's very early days on that. And, I think we have to wait and see. That's a good thing. I know many of the large financial institutions and other central banks, and we are asking ourselves, how can this help us do our jobs better? And I think it's going to be a period of experimentation over a period of years. And, the history is always that there's a lot of fear that technological innovation will eliminate jobs. What has tended to happen in history over time is that it just raises productivity and creates new jobs to replace the old jobs. And that happens. And sometimes it can take a long time, but ultimately that has been the pattern for the last couple of hundred years. Is this time going to be different? I just don't think we know yet. I don't think anybody knows.
Mm-hmm. You are a labor market futurist, also a historian, and the concept of AI and humans in the loop, very profound impact on the labor force. What are your thoughts about specifically agentic AI as a differentiator from generative AI, and how will the Fed be looking at the impacts of the workforce, the labor participation rate, given the unknown of what could happen with displacement around AI tools at all ends of the spectrum?
Our tools work on demand, basically. Lower interest rates, higher interest rates, they work on demand. When there are structural changes in the economy, there's not a lot that an interest rate change can do for that. And so if you're talking about distributional issues or labor force participation or retraining or any of the things that come to mind in connection with those questions, that's really going to be something for legislators and the private sector. We of course, we have many labor economists, and a good portion of them are studying what the potential effects of AI on the labor force, and many great economists around the country and around the world are publishing on that now. And it really is too early to say. I think you can say that some jobs are going to be phased out, some jobs are going to evolve, and people are going to be further trained and that sort of thing, and be able to keep a job like that. And there'll be new jobs that come. And how will that balance work out, and what will be the timing of it? I think it's just quite hard to say.
But how does that factor into the deliberations on a near-term basis? Things are moving so quickly, and the observation and the argument that artificial intelligence isn't just impacting those entry-level jobs and those, quasi-unskilled jobs, but really tentacles reaching into highly skilled professions, whether it be finance, whether it be communications and media, whether it be healthcare, whether it be law, finance. So all ends of the spectrum, highly educated individuals down to more easily automated tasks. Sort of a really interesting problem for those of you that are studying labor market economics. How do you approach that?
Well, a lot of what we're doing with our time is trying to understand the current position of the economy, what's actually going on in the economy today. Pardon me. So part of that is hiring rate has really dropped. Job creation has dropped very sharply. So what are the factors there? So I mentioned earlier, I think, Part of it just is there's a lot of uncertainty about the direction of public policy, and so companies are holding off. They're not hiring, and when you don't hire through attrition, your labor force shrinks, and you save money that way. That may be a way of passing on tariff costs. It may be something like that. So that's happening. Lots of questions around whether AI is a major factor associated with the relatively low hiring rate for people just graduating from school and just entering the labor market. And people are doing studies on that, and I looked at one from Stanford, another from the New York Fed in the last week, and the sense of it was, we think we can find some evidence that AI, generative AI, is having some, it's one of the reasons here, but we can't really say it's the main reason. Can't really say it's the main reason. And we have our Jackson Hole conference every year in Jackson Hole, Wyoming, and we had some great labor economists, and one of the big debates was what's going on with AI, and there was a professor from, I want to say, Columbia, who just basically said there's no evidence that this is acting any differently than other. Her view was not acting any differently from other technological, movements, waves, and so I think she would be more at the end of an optimist, a techno-optimist. Mm-hmm. We've all, there are books out there that will tell you the world is ending, and but I don't think we know. Again, I think we're going to see how this evolves, and again, if it does turn out to be something where labor force participation really declines in a way that creates, social difficulties, that's going to be something that legislators and the private sector will have to address. We just don't know that yet, though.
Over the weekend, I read where you had been discussing just